Oh, cool, Rust. I appreciate that.
Yeah, no problem.
The factors contributing to the formation, economic data, or news. Sometimes there is no news. You have no idea. Uh, like I've been saying over and over again, new product or service, institutional buying kind of pauses at certain levels into strength, or maybe there's a little bit of selling, a little bit of profit taking. Somebody that was buying in that dormant state says it's that round number. They said, "Oh, I'm up 100%." It's sort of like why it hits that level and people take the money off the table. It's a old hedge fund trick. It's not really a trick, a trend following rule. You're up 100%. You have to sell something, right? I mean, that's kind of the rule. So you don't give it all back. And just that alone kind of creates the flag potentially. Doesn't always have to. There's just some things to think about as to what happens why you're creating that flag. And then they have the case of regrets. Just they stop selling and the volume dries up and they get back in. But just to put a little bit of a color to what happens in the flag, I think we're going to get there anyway. Tighter consolidations show they're not overly eager to sell. So we're more likely to buy the base breakout high on a smaller correction in the flag. And I like an earlier entry on the 25% type of decline there, the kind of maximum amount there. So yeah, they sort of lose interest. Sort of, I wouldn't say lose interest. Just the volume sort of declines through the flag, and that's sort of what you're looking for. And the flagpole is an important part here. So, sometimes a stock is just mispriced and it floats back to a level from like 6 months ago. So you want to look back to the left at least 1 year to make sure there's no supply in the pole. And I don't know if O'Neill really mentions that, does he, though? Let's take a look at that note. But what I'm saying is if you have supply at this area in the flag or above the flag, that's where people are going to try to get out even, and that's that overhead supply. So we like the ascent in the flag at like a 45-degree angle. You see this little arrow kind of moving like this, and that's preferred. You just want to see like persistent buying. And what I say, typically don't like a base in the pole, but this is actually like a high tide flag on top of another flag here. So this is why it was good. And it almost looks like it's wedging up. I kind of checked back a few times, which is good. You want to kind of work off some sellers before it really gets going. You just kind of consistently set up buy points until it blew off, and that's sort of where you have to sell. So we want all recent buyers to be winners and they're really not looking to sell. That's why we don't want that overhead supply. And a lot of buyers kind of chase it up there, and then that's sort of where you sell. And now they're all trapped, so it kind of creates the new base. And you're usually going to get like a bigger base, a rocket base, something like that, or just a total failure. They could say, "Hey, 5G from space. Tesla decided, thanks for the idea. Now it's my idea. Now you're back to $2 or bankrupt." So, but we're going to play the move anyway. We're going to if we sets up right and there's a new idea, very very hot on Wall Street bets and all that. It's kind of meme stockish, right? So that earnings pop was like 50%, where I'm selling a lot of it into that. So, yeah. So this is the more recent one. So I think everybody can kind of get behind this a little more. Axon is a good stock. I've actually traded recently, but 2003 it was sort of like three high tide flags on top of each other, and no one really was probably trading back then. So they're not going to recall it as well. But go ahead.
Back when it was Taser, TASR.
Yeah, that's right. It was Taser,
Yeah.
and
And I think it was Stan who suggested kind of a rule of thumb looking back 1 year to make sure there's no supply. I know he likes that when he's looking for the stage two
yeah,
breakouts.
that's what I was thinking. So I
Yeah.
think that the stage 1 to 2 is more of from the other book there. So
Yep.
from Stan's book. Let's talk about stage analysis. We're going from stage 1 to stage 2. That's what we're looking for without too much recent overhead supply. And that's the stage analysis. So anyway, supply in the pole. So there's some talk about, do we like a base in the pole? But really, it's just about grading the flag, the pole and the flag. So this one was interesting because this is back when it was a crazy bull after COVID, as you can see in 2020 into 2021, when these all blew off and rolled over. This was good for like a 50% move, and I think I traded it actually. But this one came from, we measured from the low of this base up to here, rather tight flag, and along the way, it was pretty straight, 45 degrees up here. So I'd say it's a lower grade one, but definitely tradable. And like I said, you expect about 40% it went about 50% and then just completely rolled over. And I don't know, maybe they're bankrupt to this day. I mean, who knows? But you get a good bull, and I didn't really know what the N in Can Slim was here. That's the thing. If you can't really put your finger on it, you're probably taking a little bit faster profit scales, 20%, 30, 50%, and leaving a piece and moving up your stop to some daily low or something like that. So yeah, measuring from that base low downgrades the overall quality a little bit in my experience. We don't really want any arguing over the pole. That's the thing. If you say you measure from like a clear high base high and it's over 100%, that's my favorite measurement. Something that's up 100, 150%, that's fine. And even 800%, you get another 300% out of it or something like that. As long as the story is there and you're in the right group and there's a lot of potential, it's all about that future earnings. And yeah, this one was good for about a 50% move, but ultimately rolled over. So, you got to cash it out in strength. And these China names, I don't trust them too far. And I traded something like EHang and went up, another 100, 200% after I got out of it. But, you're getting a good chunk of it. That's what matters. So more about the poll. So here's a note I'm sure, especially newer traders haven't really thought of. What we don't allow is a 50% correction in the poll very quickly. This is about as close as you're going to get that you could still allow. But this is sort of like shaking my head to the whole thing. And I think it did flesh out. So we have an update. So we started working on this a while ago. So I put this on here and I'm like, questionable high tight flag. And the update is the bottom right. You see it's kind of faked out and rolled over there entirely. So the reason I think this is lower quality, it's a healthcare provider. I don't see there's any N Can Slim. I think it's just maybe mispriced. They're doing well, making good money. So that's not really anything new here. But the pull 45 degrees with that kind of drop, it puts it bottom quality in my view, basically. So, lower dollar too. You're talking about barely $5, and I always go $5 plus. So, these are bound to roll over, just make bigger bases. So, treat them like a high tight flag is, lower odds. So, if you put this in your study, of how the high tight flags work, you would know that because of this, I probably wouldn't even count it, or I'd count it as a D grade high tight flag. But of course, it could work and just go. And there's something I didn't know about it. But why did they completely undo the move, basically, right? When it kind of jumped back down here. So, um, it almost went back to even here. So this is something we don't like. Like, what was wrong? Was this whole move wrong? Like, why would it completely tank? It wasn't supported. It's not persistent buying. So that's what we're looking for. So
Yeah,
we want
and just
consistent. Go ahead.
yeah, I think what you just said about persistent buying, you mentioned that earlier. I think that's a key takeaway for me already is, if you see a drop like that, it's not just being consistently supported. It's not respecting the moving averages. It's not as orderly. And I think that's a great way to think about grading the high tide flag. And then also, one thing I noticed with this chart is before it rolled over, you had all those wicks as it tried to break out, faded, tried to break out, faded, and then it rolls over. So there's kind of a sign of weakness at the pivot breakout attempt as well.
Yeah, I like to read candlesticks, especially on the way up. You see the sellers even as it comes back, they got interested, and there's wicks at the highs there. There's sellers there, and most buyers are down here and they own a healthcare stock. And they're like, well, I'm up 100% on my healthcare stock, so of course they're going to sell it. And I don't know how many chasers are going to come to the party to chase a boring stock. Like, think of a utility stock, not in today's market though. Your standard utility 5 years ago, before nuclear was the big thing, right? You're not going to chase that up 100% and then think it's going to go 300%, right? So this is sort of the same idea. And once you have that thinking behind your high tide flags, you're probably going to improve your odds, and that's sort of the idea of this
Thinking beyond the pattern.
class.
Yep. Perfect.
Yeah, we're thinking beyond the pattern because this is the pattern, but why is it low grade? I mean, and now right? I mean, it's just the N and Can Slim. I don't know. I don't see it. I haven't really done a ton of work on it. Just healthcare, okay. Lousy poll, okay. Low dollar. Why are they going to run it up? Everybody that bought lower is probably happy with the recent gain, and then look to the left. Maybe there's long time holders, as there tends to be. There's a lot more long time holders in these boring names too. So if a boring name turns into high tide flag, there's like, well, I'm a healthcare stockholder, and those ones, they hold longer. This is where you have overhead supply in a utility stock. I've been holding it for 20 years or something like that. those are the ones everyone's supposed to be more comfortable holding versus a growth stock that has recent overhead supply. Those people are all blown out. Growth stock traders or investors are more likely to sell. So when you do look back a year, it's a little more clear. So when you have these boring stocks, and this is not something I have on the slide deck, it's just something I'm just trying to put this all together as part of the live class versus just the slides, right? So you're going to have those long-term holders. So you think about it, your auntie or somebody holding these kind of boring stocks is long-term, but when they check their statement after a few years, say, "Oh, I'm back to even. I'm going to sell," versus another move. So anyway, I don't want to go too far into that, but I think that illustrates the idea there. So this is a recent one that got away from me here. It's I actually bought Spotify in the same alert. I'm like, app is good too. That's also a breakout watch spot there. From a perfect base, you get this 100% move, and the pole looks great. Basically 45 degrees. It's not perfect. Yeah, it kind of ran right up and sideways, but the spirit of one is there. You see the moving averages all separated there. Even the faster, it's mining the ADMA, that's the faster ones tend to. Now it needs that flag. So this is just to look at the poll. And this is as of like, sometime this week. So it's that recent action we like to look at so you understand. And this is unusual too, like from a base breakout to high tide flag. You don't see that typically too much. It's kind of that dormant state, not in a great base in an uptrend. But this one really moved here. So this would be something to consider for me personally on a flag here. And it hasn't really started one yet, though, that we're waiting on one. So that's that persistent buying. It has little mini flags along the way. You say, well, is that a base? I mean, of course, it has to pause a couple days here and there. It doesn't always just go straight up. So really no sellers. If you look at the buying volume, you get the green volume up, and the sellers. I mean, here's the biggest sell day right here. That's really nothing. So, it's kind of unusual. But yeah, 100% from that breakout watch spot. But I got Spotify for a little bit less. And it's not a 100% move anyway.
And question on this, Leif, actually. So app in this scenario, it's kind of forming this flagpole. We'll see if it forms an actual high tide flag, but it's forming this flagpole kind of late. It's already been in a longer term uptrend for a while.
Yeah.
How do you think about that with regards to quality? Would you prefer ones that are, the initial move, there's been a lot of neglect beforehand, like a CLH, or this, how do you compare that to the quality of this one where it's happening after it's already had a pretty large move?
Yeah, that's a good question. The dormant state is always preferred, but there's something going on here. It's a little bit unknown. So we kind of, move up the unknown stocks. I think it became known with this move.
Right.
It's kind of drifting around. I don't think everybody was on it. There wasn't as much demand for it. And obviously the demand just jumped. So, there's something going on here. Maybe they have something that's going to be incredible and somebody knows about it and we don't, right? So a lot of the news can come out later as to what's going on here. But this is tradable, and I'd grade this with a perfect flag as pretty high. It would be B plus or better, I think, depending on how it looks. So
Yeah, that's persistent buying. Look at how it
yeah,
respects.
the flag is
Yeah,
excellent. So that's an A flag. So we like that. I mean,
the
sorry, A
flagpole.
pole,
Yeah, yeah.
a flagpole, right? So that's A there. We'll see what the flag brings. I mean, maybe the flag turns to junk and just blows out to the downside. That's why we wait that 3 to 5 weeks in the flag. But this is the process of starting to track a high tide flag. We're looking at this one, and we're going to consider it on the right side of the flag.
And just for everybody's awareness, on that chart, and I think on all your stock charts, you've got the 80 MA in purple, the 21 EMA in green, the 50 SMA in blue, and I think it's the 200-day in light green at the bottom there, just so everybody's aware.
That's right. All right. So there's different rises too. There's vertical rise. You're going to see a lot of the vertical rises more for speculative biotechs. Typically, is there's some kind of news event and then it just kind of opens up like 100%. You're going to see a lot of those. I typically don't like to stretch the measurement. Like I think we traded ASPN for a little bit of money here, but ultimately I think it rolled over and it's sort of like 90% rise, maybe measuring sort of like from this low, which is valid. So it kind of barely got there, and it's just kind of chemicals and I think there's a EV, electric vehicle thing for this, batteries and such. But spec bios will sort of have this straight up vertical rise. And it's usually on news or positive data. Earnings especially can create this kind of stuff. This was an earnings move actually. Revenue was up over 100% year over year, and the thermal barrier, I guess that's for the batteries, was up huge there, almost 500%. So, um, is there a base in the supply there? And not really. There's not too much overhead. Everybody's a winner when it gets up there, so it's tradable, right? So, I have to stretch a little bit, maybe, so we'll say, C plus or better, right? So, I mean, it was okay, but tradable. The flag was excellent. You get that good shakeout, sort of. I always think of it as shakeout as putting the low in the handle, perhaps. So you sort of get that shakeout. We're always looking for a shakeout, um, kind of test everybody's conviction there. That's what a shakeout sort of does. Uh, so yeah, we're talking about, we don't want to stretch the measurement, especially stretching it kind of below a 200-day moving average or something like that. We don't like that. We're going to go show a couple of those. Um, see, after 4-week base in the poll. Yeah, we don't like a base in the middle of the poll. So this just straight up to a high tide flag. So you could play this one. And that's that. And more of the vertical rise. This is sort of a recent one that's just setting up. I think it sort of dumped out, but we're just showing the sort of
Exactly.
biotech stuff. You get the big news and earnings and whatever it is, or data comes out, and it sets up and kind of pauses at a certain level, and then kind of resumes almost on more news, right? As this kind of gaps up. And this one there could be something going on with this one. Just keeps going forever. Well, not forever, for a long time, obviously, and we'll see what it does. But you start tracking these, and this is early. We're looking for 3 to 5 weeks. It never really got there yet, and then it kind of, I think it dipped out in the last few days. So you can always revisit. But spec bios they're pretty risky, and sometimes you want to size them for this type of gap to the downside too. These traders that trade real money trading mostly spec bios, they can be rewarding, very rewarding, but it's also very dangerous. So I'd rather trade more of a growth stock leader or something like that than a spec bio. But you can trade these. It's just your sizing should be considered in a different format. And for me, I sort of wean myself off of these over time because it's just too much stress when you have something going to the downside. I've never really been blown out one of these too bad, actually, but you can. That's the risk. So you can trade very tight again and explode, and you're seeing the moving averages kind of supporting. You'll see the 21 EMA sort of support the low of the flag here, and then it goes up, and then the 21 EMA is a little bit too low away from this low of the flag. So we're also looking for the timing. The 50-day doesn't always have to come in to support the low of the flag, but at least want the 21 EMA is typically going to support that low of the flag. If you draw like a horizontal line from the low of the flag to the right side, that helps with the timing in my view. We're going to get into that a little bit too. So some of the key points, obviously, there is the thinking of the timing is next, and the entry stuff is very important. But anything else, Richard, you want me to do about that one or no? Good.
No, I think that's good.
Okay. So lower quality high tight flags, once again, as this is Rick. This is the gentleman's club. Really nothing new there in my view. There's just kind of more competition, over time, I guess, to something like this. And if it doesn't go on earnings, I think there was earnings and it really stayed there on the right side. It was just suspicious and just ended up chopping around, blowing off on where was this? Yeah, maybe it just kind of blew off and rolled over. So the N in Can Slim wasn't exactly there. So yeah, this is an 18 plus class, by the way, I'm just saying. And the charts are a little more exciting. We got a really very exciting chart for everybody. Anyway, this is not a high tight flag. So this is the next important thing here. So low grade high tight flags. Then there's not a high tight flag. So this is just a big choppy base. I had to pull this chart. It's kind of ugly chart, but this doesn't trade anymore. So you see, it's just kind of, we don't trade a base, first of all, that declines more than 50% from high to low. So this base is faulty, and I think this ended up getting delisted. So when you see something like this, there's a big argument over it, and the argument, the people, the sellers here won eventually because it was delisted. But if you're looking at a rise off this low, maybe your formula, your scanner might pick it up if you're not using. If you don't do a couple things like you don't want anything to the left at this level, this many weeks in the past, which is something you could put in a scanner too. Make sure you don't have this supply up here to the left side. But measuring from here to here, it starts to put you in the correct flagpole. And I don't know what this decline was, but I think it was close. And someone was asking, and I said, so that's not a high tight flag, even if that was a 25% drop or so. And there's recent overhead supply. So just a big faulty base here, not a high tight flag. And your scanner might show this, you just delete it right away. It's kind of a low quality pole, just sort of straight down to straight up. Not that it can't work. That's the other thing. We'll say, well, Leif was wrong. It went straight up. but I just won't. I'll consistently not trade this as the high tight flag. And if it goes without me, I'm not sweating it in the least because I'd be breaking a rule if I traded it. And you should be angry with yourself if you trade this, break the rule, and it goes down, right? So that's the thing. We don't want to be angry with ourselves. We want to be happy traders. So this is part of the process of learning what to trade and keeping the train on the tracks. Okay, so don't get distracted and say, "Oh, this has some momentum. I'm going to go crazy with this one." So just something to think about there. Okay, so the right side of this one, pretty decent high tight flag if you measure from here to here and don't consider anything to the left. But you have all these trap buyers up there to the left. They're waiting to sell to you when this breaks out. So I would need. I mean, this is just a big faulty base now. Something I wouldn't even look at. But it did have the 100% rise in 8 weeks or less, and then nice tight little flag. But and it could work. Okay, but you have all these bag holders up here if you want to think about it that way. They're ready to get out. They're ready to sell to you. So your little breakout there is going to get swatted, right? That's typical. So I wouldn't treat this like a high tight flag. Just treat it like a big base. And this is actually in the lower part of the base, especially if you look to the left. So you want those clear skies. That is a Weinstein thing. Now that I think about it, for sure. So we have to adjust that one slide. You want to look back a year, 18 months, typically something like that. So another not a high tide flag. So deep view chart of RNA here. Looking to the left here, you see recent supply. So you go back about a year. I probably wouldn't treat this as a high tide flag. I'd look at it as I'd look for just a longer base around highs there. So it's sort of a big sloppy base is what I'm saying, but good power off the lows. So maybe you want to consider the next base, but just trade it as a regular base then, right? You want 8 weeks or something like that and see how it goes from there. But something like this, I'm not treating as a high tight flag. It's just kind of like, looks like price just kind of snapped back to where it was before and not super interested. And so I'll pass on that. And it's not exactly something in O'Neill's book, but that's just the way I do it, just because you got to be consistent. You just can't have all different looks. You're sort of trading the same thing, just being consistent. So just to pound it, into your head, another one. Not a high tight flag, good measurement from here to here, nice little flag. And I don't know where it went from there, but it just looks like a big base, so we don't count it. It's just a big faulty base and very deep base also. So the deeper the base, the more I'm not trading it. So especially anything over 50%, like I said. So E-hang, we actually traded this. We're going to show this, I think, on the next segment of the class. This move I traded. This move I'm out. But then it starts to set up again a high tight flag. But not a high tight flag because all these trap buyers up here, a lot of volume up there, snapping back to these levels, and I think it kind of blew out to the downside from here anyway. So it kind of validates the idea when it is right in hindsight. It could, of course, it could just keep going, but this is something we wouldn't trade as a high tight flag. The Duolingo is just a very recent one. A lot of people are asking about this, and I used a little bit of volume profile in the chart. So a lot of trading was done around the 200-day moving average, which is, of course it is, right? It's sort of the magnet, and a lot of trading is done there. So I wouldn't treat Duolingo as a high tight flag measuring from down here. So I have to really stretch it, really stretching below the 200-day moving average. I don't know if I have this on here. Don't want to stretch too far below that. So that's kind of a shot against the idea. Kind of maybe a more clear entry or beginning of the pull would be from around this high of the high tight flag. If you want to start your flag pull from here to here, and it's not 100%. So this isn't any good. So maybe you just want another base. So what I was saying, so I'm looking for a shakeout and just a regular base, and I think it's going in earnings. And it did do a little shakeout actually. So, it got really tight though. So it's trading nicely there. The 50 days a little way below it. So that's the other shot against it. You really want that to come in for a little more support and maybe even touch it. So, you can play a turn off it depending on how it looks. So we're looking for that shakeout and base. And anyway, just not treating it like a high tight flag, but could just go straight up, of course. So anyway, the flag. So I have this nice little arrow going over to the right. So the timing with the buy that actually stuck was almost perfect. The 50-day moving average came in to support the low of the flag. And the flag was maybe 1% over what we allow, but how much of it was trade over 25%? There's just that one little wick there. So you can discount it a little bit, especially when you have that move of over 400%. And it just came from a little mini flag here too that I didn't trade. So that's something to look at there. Um, and the flag itself starts at this high here and measuring to that low. And that's almost 26% or so where you got a little wiggle room there because of that huge rise in my view. And that's what I'm saying in this note down here. It's got the look, it's got the in and can slim. One little wick kind of put it over 25%. So I'm not going to run for the hills over that. I'm going to give it a shot. So this is our big high tide flag trade for the year. And we're going to review a lot of this one. Reduction trading volume as interest wanes. So you got the flag pole had this kind of two big up days, and the buying kind of dried up throughout the flag and then picked up again when I tried it the first time, sold some of the strength, dried up again. And then when I tried it from an inside day, triple inside actually coming out, the volume picked up there. And then it went on a monster move there. So it definitely had the spirit of one to me. And I was willing to not let perfect be the enemy of good, as we had that slide there. And it's sort of the spirit of one. That's what I mean. Yeah, and when trading conditions are really good, that's when you want to be a little looser. Trading volume, dries up throughout, and you want to see it pick up at your buy point. But that volume can come in later. You hit it at your buy point. You're not necessarily sure that all that volume is going to come in. But we're looking at the relative volume on the day, and you want to see high relative volume, over 1.5 times relative volume typically at your buy point. As the real buyers step up ahead of the daily high buy point. That's what I want to see too. And not always the case though. So you sort of have to, take your risk sometimes blind and hope that shows up. If it sets up perfect, triple inside and out with the volume dry up, yeah, I'm going to hit it anyway. So everybody that says, well, the volume didn't come in, it doesn't always come in. It comes in later, or you're not even seeing it until you already bought it, and then it shows up. So you sort of have to just buy the pattern sometimes. A little bit more moving averages. Go ahead.
Life, just one question. There's a question about, how many days long do you like to have the flag be? You might cover that on a slide that's upcoming. I'm not sure, but yeah, how many on average do you like to have? What's the minimum you would like, and what's kind of an ideal amount, I guess?
I just look at it in the weekly. I want to see like at least 3 weeks. So it's 3 to 5 weeks. 3.5 weeks is real good. A lot of powerful ones will go then. This one was maybe a little towards the end of that though. So,
Right.
It's all about the weeks, 3 to 5 weeks in that range, however many days, somewhere in between that. There's no perfect answer. It's just all how it looks, right? I mean, one can set up very quickly. The first one here was very, very quick. Second one was a little bit longer and sort of check back on top of the flag, on top of the base, right? So the look is important too. It's got to have that look. It's got to have that cup and handle look. And good cup and handles have some of the VCP ideas, still tightening up, contracting, of course. So you want something like that, just a tight area. I mean, tight areas go back to the beginning of trading, a tight area, base, box, breakout, something like that. But within that 3 to 5 week time frame, and then we do get into the longer ones later. We do have a slide, so that's a great question. What happens when they go too long? And usually you're going to get a stop. So we're going to show a few that I took. This is not all